Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Monday everybody. Two subjects which we have discussed in great detail in previous videos are 1. Beijing's desperate efforts to increase household consumption in the economy, and 2. The local government fiscal and debt crises. However, a subject with which we have given less attention, and which touches on both of these to some extent, is the issue of household debt generally, and consumer debt specifically. Longtime viewers will remember episodes discussing the historically and comparatively high levels of household debt in China, but a sub-theme which is relevant to Beijing's hopes to increase consumption is consumer debt, as a key factor in how comfortable consumers will be to spend is just how leveraged they already are. It seems Chinese analysts are also increasingly recognizing the importance of this topic too. Over the weekend, several domestic outlets published reports of varying depths examining this question. The best of these was from Chinese financial media outlet Caixin, and today we will unpack some of the findings and observations of this Caixin report as it relates to consumer debt and the implications for the wider economy. Before looking specifically at consumer debt, let's remind ourselves of the situation for household debt generally. Back in 2020, Rhodium Group produced one of the most thorough reports on this topic. The report concluded that, quote, China's recent household debt expansion rivals that of the United States pre-crisis, here referring to the GFC, within a smaller economy. Over the past 5 years, from 2015 through 2019, China's households have added $4.6 trillion in borrowing, compared to a $5.1 trillion expansion in US household debt from Q3 2003 to Q3 2008. End quote. Earlier this year, a quarterly report released by China's National Institution for Finance and Development found that the leverage ratio for households surpassed the level of Germany and is nearing that of Japan. By the end of last year, household debt as a percentage of disposable income had reached a record high of 130.9%. And of course, this is just part of the overall debt situation in the wider system. Total debt as a share of GDP hit officially 295% in China last September, surpassing 257% in the US, and an average of 258% in the Eurozone. The just mentioned Rhodium Group report from 2020 also found, quote, while most of this growth, that is the growth in household debt, is tied to China's property market in the form of mortgage debt, consumer credit has expanded rapidly as well. Credit card debt in China now exceeds US levels in absolute terms. End quote. Indeed, in a June 2020 report published by the People's Bank of China, at the time credit card bills overdue by more than 6 months had soared to 85 billion yuan, more than 10 times the value a decade earlier. Of course, the economy was also much bigger than a decade before, but still this growth rapidly outpaced that economic growth. Interestingly, the report also demonstrated an age divide in leverage, finding that over half of those who were debtors were born in the 1990s. Now, this all nicely moves us onto today's main topic, consumer debt. As we know, for several years now, boosting consumer spending has been a priority for Beijing, which encouraged banks to increase lending to individuals through consumer loans and credit cards. Online financial services were also encouraged for a time, leading to a boom in peer-to-peer, P2P lending, which would also result in a bust, as regulators recognized the risks they introduced to the financial system. As a result of these policies, Caixin writes, outstanding consumer loans, excluding mortgages, surged to 17.24 trillion yuan, $2.42 trillion in 2022, from just shy of 4 trillion yuan in 2013. Within that total, medium and long-term loans jumped to 7.89 trillion yuan from 1.3 trillion yuan, an annual average increase of 22.2%. This credit boom has also led, unsurprisingly, to a surge in non-performing personal loans. In 2018, Hainan Haide Capital Management Co. Limited, using numbers provided by the People's Bank of China, calculated that these non-performing personal loans were about 25% of commercial banks' combined non-performing loans at the time. Since then, the data has not been made publicly available by the People's Bank of China, so we do not have any revised calculations. The fact that no updated data has been published in of itself is quite concerning. However, there are some rough estimates. For example, one Shenzhen-based asset management company in late 2022 estimated that the total volume of non-performing personal loans could amount to more than 3 trillion yuan a year by the middle of this decade. In order to deal with the risks all of this presents to the financial system, which is already facing several other major challenges, the China Banking and Insurance Regulatory Commission has stepped in. In a recently introduced trial policy, 18 major banks were permitted to package up their non-performing personal loans, which include consumer loans, credit card debt, and business loans, but do not include mortgages, and sell them on to other financial institutions. The hope was, and continues to be, that the diversification of the bad debt will reduce systemic risks. This is especially the case for small and medium-sized banks and consumer finance companies, which need to, quote, offload their growing mountain of non-performing personal loans and ease pressure on their balance sheets, end quote. Cai Xin writes that this process hasn't been smooth. Quote, when the pilot program first started in 2021, the market was irrational, and there were non-performing personal loan packages with discounts of 70 or 50% on the book value of the assets, end quote. Adding, quote, but the discount to book value has grown to more than 90%, end quote, by the end of 2022. Quote, banks are prepared to offload their assets even at a significant loss, because they are under pressure to control or reduce their non-performing loan ratios. The low prices also reflect the difficulties banks and consumer finance companies encounter when trying to recover delinquent personal loans, which, unlike corporate loans, are mostly unsecured, end quote. Despite this, there are some commentators that believe there is good business in this new bad debt market, and some individual companies will be winners. The question, though, is what all this means for the wider economy. As we can see by covering this in today's episode, this surge in consumer debt has not only increased financial stress on households themselves, but also on banks, and this has Beijing concerned. Quote, a rapid rise in the household leverage ratio would affect the stability of the financial system. A key fuse for the global financial crisis in 2008 was the overly high debt in the household sector. In China, the risk of household debt is highly relevant to the situation in the property market and in terms of income growth and wealth distribution, end quote. In China, financial crisis still appears highly unlikely, however. What is more likely is that as households in the aggregate have high levels of leverage, this will impact, all things being equal, their willingness to consume in the economy as they try to pay down this debt, adding to the factors dragging down growth over the medium to long term. An extreme version of this was seen in Japan during the so-called lost decades. Quote, the bias of policy will continue to be pushing down leverage wherever they can, even if it causes growth to be lower, slowing to 2 to 4% in the coming decade, end quote. And, quote, Chinese borrowers that are focused on paying down debt are less able to fund new projects that would increase GDP growth, end quote. To end today's video then, let's look at the words of one such borrower. Quote, debts have hugely reduced our family's quality of life. Except for the tuition fees of our children's international school, I'm trying my best to reduce our living expenses to within 5,000 yuan, $700 a month, end quote. Hey guys, if you enjoyed today's episode, which was focused on this particular deep dive topic, don't forget to hit that like button. For those who want to go the extra mile, Patreon and Buy Me a Coffee links are in the description below. Sharing and subscribing are also a huge help. Thank you for watching today's episode. Wherever you are, I hope you have a wonderful Monday, and I will see you all tomorrow.